Hello, crypto world! Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. This is going to be an XRP video. I'm going to talk about where I believe we are in the bigger picture and what I believe we have coming down the pike. So let's dive in and get started. So this is really important to understand. If you understand this, it's going to put you ahead of many in the XRP world that are just blindly investing. XRP has a repetitive structure. In this structure, there are bull runs, declines, and range-bound times. I talk about this in every video because it is so important. It's so simple, but it's so easy to get lost in the day-to-day moves. This sequence of structures, bull run, decline, and range-bound time, repeats over and over again. We see it here, bull run, decline, range-bound time. They play out on different time frames. Here's on a very small time frame. If we go back, it's the same thing that continues to play out on the chart. This is important. These structures always play out in this sequence, bull run, decline, and range-bound time. You're not going to get a range-bound time that goes into a decline. You're never going to get a decline that goes into a bull run. It's always going to be bull run. It's really simple. Moves up high. What comes after that? It declines. Once it declines, the momentum, the excitement has petered out, and we're stuck in a range-bound time. Eventually, excitement returns, and we get another bull run, followed by another decline, and the cycle just continues to play out over and over again. Like I said, it's very simple to understand, but it's something that it's so easy to lose sight of when we have our nose to the grinding wheel in the daily tracking of XRP. So where are we on today's chart? So here is today's chart. We've completed a bull run. We've completed a decline. We are working through a range-bound time. Once we complete that range-bound time, this is what awaits us. So even though there is a ton of despair right now, a ton of fear, uncertainty, and doubt, this structure gives way to this. Let's dive into the nitty-gritty and find out where we are within this range-bound structure. Okay, so here's a look at the nitty-gritty of today's chart. Here is the bull run. I've talked about bull run structures a lot in the past, so this right here is really just a classic bull run structure. You have the decline. I break up this decline into several different structures. I label them from A to F. After the decline, it goes into a range-bound time. What makes this range-bound time unique in today's chart is how high this initial move up was. Normally, it never goes above the peak of the bull run. Whether this peak is very low or this is very high or it's a mix of both, I don't know. So in the first structure of the sideways range-bound time, price moves up to a peak, which is part A, and then it moves back down. And then in part B, it either goes flat or arches down. Today's chart arched down. In the second fractal, or the second structure, we have three waves: wave A, wave B, and wave C. And then finally, this third structure, this is kind of the Wild West of the range-bound time. It plays out so uniquely every single time. So essentially, there are a few main parts to it. It moves up to a peak, which is part A. It then either crashes, like it did here, or declines, and it moves down to a low. Now, I am counting this, as of now, I could be wrong about this, as the low. And the reason why I'm counting this and not this is we have examples in history. Let me show you. So if we go back to 2016/2017, this is a third range-bound structure. It ends this kind of range-bound time before going into a bull run. We can see that price moves up to a peak, which is part A, and then it declines down to a low, which is part B, before reversing and then, or recovering, doing the small correction or the second correction, and then going into the bull run. We have this wick here, but this wick is just kind of noise. And if you examine this same time frame on different exchanges, this wick varies, similar to today's wick on today's chart. Now, it's always possible that this was the low and this is the next part, but the reason why I don't believe that to be the case is it's still kind of hanging out near the lower end of this range. After the low, it recovers, and it typically recovers to around this area. And then you have the second correction, which we would most likely still need to do, have that second correction, and then it goes into the bull run. Now, like I said, this is the Wild West of this range-bound structure, and the reason why is it plays out so uniquely every single time. We can take a look at the last time it played out, and it looks very different. So it moved up to a peak, which was part A, and then it took a very long time to come to a low, which was part B, and then it recovered and then did the second correction before going into the bull run. In my last video, we actually copied this structure, and there was a lot of similarities. What I'd like to do right now is just copy this part of the structure and compare it to what's taking place on today's chart. So here is that fractal adjusted to today's timing height and depth, and as you can see, there are similarities. You know, in the last video, there was similarities as it moved down that same structure. Well, I don't know if it's going to continue following this. Remember, every time it plays out uniquely. So it could just be borrowing a little bit from this structure, maybe a little bit from another structure, and it's going to be original. Now, I hope it doesn't take this long before it begins to recover. If this is at play, it would still need to recover and do the second correction before going into the bull run. Now, there's this structure that we can reference, the one we just compared back to, the one with the wick. If we were to copy this part of the structure and paste it onto today's chart, so basically this is after the low, the recovery, and then the smaller correction or the second correction before going into the bull run. Let's copy this and see how it compares to today's chart. Okay, so this is how I have it adjusted. Now, it's possible it's playing out on a larger or smaller scale than this, and it may just do something totally different as well. But there are some similarities in today's chart comparing back to this one. So if this is at play, it could potentially move down and then begin to move up. If we compare both this one and the one we just looked at, the one from 2024 versus the one from 2017, they tell a similar story. They both kind of do similar things. It's at this point where they kind of do their own thing. So knock on wood that we get this March 2017 version and not this one, but we should be open to something like this as well. Folks, as I pointed out in my last video, this structure, this third range-bound structure, is a structure that is just great at promoting fear, uncertainty, and doubt. As I pointed out in my last video, if you go back and watch your favorite analyst when this structure back in 2024 was at play, and try to find their videos during June and July, all of this, August, September. What were their videos like? Were they full of fear, uncertainty, and doubt? I would venture to say that a good number of them were. It's just what this fractal does. This fractal, historically speaking at least, has a track record of just promoting fear, uncertainty, and doubt. So always keep that in mind when we're in this structure. But even with the fear, uncertainty, and doubt, at the end of this structure comes a bull run. It's my belief that this structure, this range-bound time, gives way to the next bull run. And I don't think it's going to be years in the making. We have been going through this structure, the range-bound time, pretty quick so far. I want to jump over to the XRP dominance chart. So here we are over at the XRP dominance chart, and it's my belief that this chart has a repetitive macro structure to it. Essentially, it shoots up in a bull run, and then winds its way down to a low, and then it repeats it all over again. This bull run took place here in 2014, and it finally came to a low in 2017. So it takes a long time. So here's the next part. This structure repeats again. So it shot up in 2017, and it's been basically in 2024, it came to the end of the 9th structure, which completes the decline. Now, what we want to focus on is what comes after the decline. So if we look here, we have the ending part of a 9th structure, and then it moves up. This is the original structure. Let's zoom in. Now, original structures are really important because everything else copies it. So we have the ending of the 9th structure, and then it moves up into this kind of point where it's above the high of that 9th structure, but it's not really anything like this. Once this completes, then it goes into the shock and awe bull run structure. If we move further down, the second time this plays out, we could see the same thing takes place again. We have the 9th structure, which is kind of the bottoming out of that long decline, and then it moves up. We have this consolidation part that's above the high of this 9th structure, but it's not the shock and awe that comes after. Well, let's move on to where we are today. So this is today's chart. Here is that ending structure, the 9th structure, and it's moved up, but it hasn't been that shock and awe part of the move up that comes after the completion of this decline. So this is, as we can see, historically speaking, part of the bull run structure. It's the beginning part. It would be really weird if this was all that there was. It's never done that before. The XRP dominance points to a move up that should be good. Okay, so here we are back at today's chart. Now, I don't know how all of this is going to come together. Every time this structure plays out, it plays out uniquely. What I do know is that in this structure, there is a high point, which is part A, and then it declines to a low, which is part B. Part B could be here. I don't think so, because usually after the low, it recovers, and it hasn't done that. It could also, in theory, go lower before recovering, which would mean B is not in yet. However, I think there is evidence with the fractals we just looked at that this could potentially be the low. And if it is, what we are looking for is a recovery. Typically, it recovers to around here. It could recover at a higher point, and then it goes into that second correction. So we would still need to do the second correction. And then once we're done that, it goes into the bull run. So despite the challenging structure that we're in, with all the fear, uncertainty, and doubt that has been rampant in the crypto world, I believe this structure will lead into a very good time. Just like the XRP dominance chart shows, the best part, I think, has not taken place yet. It's going to take a little bit of patience and faith getting there, but it's my belief that good days are on the horizon, even though it doesn't look like it at the moment. This is not financial advice. I'm not a financial advisor. You need to do your own research and stand on your own convictions. If you did enjoy this video, it'd be much appreciated if you hit that thumbs up button. And if you are new to this channel and you like this type of analysis, I recommend hitting that subscribe button. I'll continue to follow up on this chart as it continues to develop. And if you would like to join my Discord, I'm active there. You can join it. It's connected to my Patreon. That's the way to get to it. My Patreon's a $5 a month subscription. You're welcome to join. I'll put the link to my Patreon in the description of this video. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.